Unity Software is one of the leading companies in game development, but recent fumbles by the management team on pricing issues have sent some customers looking elsewhere. All that being said, what's a fair price to pay for Unity Software stock? That's the question I'm going to answer in this video, doing the discounted cash flow valuation of Unity Software. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, what I have pulled up on the screen right now is the discounted cash flow valuation for Unity Software. Now, the inputs for this model came from several sources, including Yahoo Finance and Ticker.com. Included in this valuation are also my estimates and my assumptions on growth rates, on weighted average cost of capital, and other inputs to this valuation model. I'm going to go with you each one of these steps and highlight what each these numbers mean. So let's get started with this 2024 free cash flow number of 250 million expected for Unity Software. The free cash flow expectations from 2024 to 2028 are derived from Wall Street analysts that are following Unity Software stock. Remember, nobody knows what's going to happen in the future, and not even Wall Street analysts that are following the company. They just utilize the best information at their disposal to make these forecasts. Wall Street analysts that are following a company typically have a close relationship with the company's management team. The company's management team will give these Wall Street analysts information to help them make these free cash flow forecasts. And so they incorporate that data to make these forecasts. That doesn't mean that these forecasts will be accurate. It just means that they have better information to make these forecasts than most individuals because they have that access to the management team. So those are the forecasts from 2024 to 2028. And that growth rate would be 12.8% per year from 2024 to 2028. From 2029 to 2034, I forecast the company's free cash flow growing at a 6.4% rate in those years. That would cause the free cash flow to rise from 410 million in 2028 up to 595 million in 2034. From 2035 and beyond, I'm forecasting the company's free cash flow grows at a 5% rate from that year to infinity. And the reason I use 5% and not 3% is because I'm forecasting growth rates in free cash flow in nominal terms to be equal to the growth rate of developed economies worldwide. Looking from 2035 to infinity, I'm using the terminal value calculation, which takes the free cash flow 1 year ahead, divided by the weighted average cost of capital minus the growth rate. And I already discussed the 5% growth rate I'm using. The weighted average cost of capital I'm using is 11.1%. I'll go through the details of that calculation in just a little bit. So the terminal value calculation is $10.2 billion. So when I combine the free cash flow from the next decade and the terminal value of the free cash flow, I come to a value of operations, a present value of operations for Unity Software at $6 billion. Now, the weighted average cost of capital, 11.13%. I arrived at by utilizing a cost of debt of 8.5% for Unity and a capital asset pricing model cost of equity at 12%. The beta I used for Unity Software is 1.25 and a risk-free rate of 4.5% and a market risk premium of 6%. The market cap of the company is $9 billion and it has $2.238 billion in debt. And so I assigned it a target capital structure of 25% debt and 75% equity. So utilizing all of those inputs and using the capital asset pricing model and the weighted average cost of capital, I came to the conclusion that the company's weighted average cost of capital is 11.13%. Now, as you've seen so far, there are several estimates and assumptions I've already used to come to these conclusions. So please proceed with caution. Do not take these numbers as precise numbers. These are very wide ranges that could change the outcome if you change one of these inputs by even a small percentage point. Moving on, the value of operations of 6.1 billion, we need to add the company's cash balance of 1.4 billion and subtract the debt of 2.2 billion, and we arrive at a value of equity of 5.2 billion. But we want to know the price per share. So we want to divide the value of equity by the number of shares outstanding of 399 million. That brings us to an intrinsic value per share of $13.12. The current market price is $21.55. So this discounted cash flow valuation model would suggest that Unity Software stock is overvalued. But remember, I used several estimates and assumptions to come to this conclusion. Also remember that just because I come up with an intrinsic value per share doesn't mean that the stock price is going to go to that value. The market could disagree with all of my calculations and the market price could continue going up, right? It doesn't mean that the market price is going to go to my intrinsic value per share. What this value is my estimate of what these shares are worth. And in other words, if I wanted to buy Unity Software stock, I would look at this price and I would want to pay this price for Unity Software stock. And if it's selling at $21.55, I would look to something else if I wanted to buy a stock. I wouldn't be buying the stock at this price, me personally, right? That doesn't mean the calculation should be the same for you. This is just my personal calculations, my personal worth of what these shares are priced at. And I would compare the market price to my intrinsic value. And I would make a decision, of course, incorporating the many other qualitative factors, all of the other research I've done in Unity Software stock. If you're following my channel, you know I do more than just look at these numbers and make a decision. This is just one part of my calculation of an investment. In fact, in my 6-step framework, the valuation part is only 40% of the overall decision-making criteria of investing in a stock. And this is just one way to do evaluation. There's a couple of other ways that you can do valuation. So this calculation by itself is not enough, is not the only thing I look at when making a decision about a stock. And I hope it's not the only thing that you look at. I hope you're doing more due diligence before making a decision on any investment in the market. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.